Welcome to MyStockScanner Live. This is the home of the 3-point playbook, the portfolio that follows the same strategy, and that's doesn't matter if it's night or day. We are up by 32.4% on the 3-point playbook portfolio, and it's because that we cut through the noise, we break down the headlines, and then we run the stocks through the theme every single day. Is it a quality company? Does it have an upside? And it is now the right time to buy. It's smarter picks, it's more confidence and less stress. My name is Bavarian. I have 2 questions on this show. If you have any questions, then do mail us FOMO@MyStockScanner.com. And here are 2 stress-free gentlemen, Liam Flavell and Hans-Henrik Nielsen. I thought you were going to look a little bruised and battered after the market turned red yesterday, and well, I see they're down again today. Hans-Henrik, no worries at all.
No, not much. We've been in the market so many years. We have a strategy that works, so you can't trade without having a bit of volatility.
And Liam, I'm going to ask a little bit. It's not portfolio day on the show. That's on Mondays when we open the 3-point playbook portfolio. But I'm going to ask you, did we take a beating yesterday in the portfolio?
Not at all. We're only about 50% invested at the moment, so that's a good thing. It minimises our losses. We sort of saw this coming. We've got a couple of models that we use. We had an email come through at FOMO at MyStockScanner.com this morning, I think it was, and we will get to that probably on Monday. Is a good thing, where we were being asked about sort of what is the rule, what are the rules, what are the macro sort of elements to how we come in and out of stocks and decide on this. We had a really good stock yesterday called Sealed Air Corporation, which we sold, and that's what really kept the portfolio on an even keel yesterday.
We're going to get to that stock in just a minute because we take a sneak peek into the 3-point playbook portfolio because we had that important sell that sealed the day for us yesterday. Apart from that, we are having our Friday face-off. That will be AMD versus Broadcom on the show today. I will ask Hans-Henrik and Liam if AI is too big to fail, and we'll get some tips on how to handle, well, the small, should we say, waves that we see in the market right now. And also, if you are sitting with 1,910,000,000 stocks in one company, then you could move the market. That is number of the day. And we're going to sort of, look into what that means if you have that sort of power, if that can change anything. Which company we're talking about that sits with these numbers of stocks, we will get to at the end, and also what company they hold the stocks in. But now let's get to it, and I know it looks dramatic when we put the video on. Hans-Henrik, if we look at the market in general and we talk about what's going on the market right now, what is it, or what was it that we saw yesterday, if we ask that?
Yeah, I can't help laughing a little bit looking at the market here. This is S&P 500, and this is what people call a crash, basically. To be honest, there's nothing in it yet. It is a little ripple. Could it be more later on? Yes, it could. If AI crashes or the bond market crashes, or everything can happen. For now, we are not particularly worried. We have been waiting for a 5 to 8% drop at some point, but that is just a natural movement in the markets. We expect some more trouble in, let's say, Q2, Q3 next year, but that is because all the tariff war and everything will start to really hit.
But if we look, if I go back some hours and then look at the ending yesterday in the US, it was AI stocks, it was financial institution that took the big hit yesterday. Again, I know that I asked you already about being worried, but that is fave stocks for basically everybody in the market.
Oh, yes, it is. And the thing is that they have gone up so much and people have so much profit in them that people are a bit jumpy. There are a lot of people sitting with the finger on the sell button. However, we are just coming out of a quite good earnings season. The tariff war haven't hit anything yet, and the money are plentiful in the AI investment business People are throwing money at everything. So right now, I think if the market drops 5 to 8%, there'll be a lot of buy the dippers. There'll be a lot of people saying that is a good value now. There might be some of the fragile stocks like quantum computers and crypto and so on that are a bit more volatile and could see some more drops. But overall in the market, we're not that worried.
One of the stocks that shot up yesterday is one of the stocks that we have in our 3-point playbook portfolio, guys. And let's just say, if we keep with the sort of pop vocabulary that sealed the deal for us yesterday, Liam, we're talking a quite specific stock. It's called C. That's the ticker code for it. It's sealed air, and they have that bubble wrap thing. I think most of us has popped that. We didn't pop the champagne though yesterday, did we?
Not necessarily the champagne, but it was a good day. They basically got a company come in to try and take them private, which means they're going to delist them from the stock market. And to do that, they need to buy all the shares in circulation, or a majority of the shares in circulation. I haven't actually seen the full details of the deal. So what they have to do is offer a massive premium, mostly to the shareholders, to make them want to part with their shares. The stock was up, 16%, 17%. I think my portfolio, we sold out about 21%, and I think it was 23% up at one stage. So the terms of the deal, I think, are $42.99. So it's roundabout, it might be $43.99, but effectively, we can see here that actually it's still a quality stock. If I just do a very quick sort of 3-point playbook analysis, you can see, the first point in the playbook is where we only want to focus on quality stocks. We just want quality in our portfolio. We don't want stocks that have got a ropey past, got a misguided sort of set of adventures that it's been on in the last few years. So you can see here, from our point of view, we've got a quality score of 82. That hasn't changed too much in the couple of months since we bought it. The earnings per share, it's looking like it's going to have a fantastic year this year, and then sort of stop growing too much on earnings for next year. But the PEG ratio, those are the three areas that are our favourites on the quality metrics. So 0.2 is very low, so it's in the green, really, really in the green. So it's a good quality stock with some upside there. So we're looking at this. There's not much red in the equation there. If we look at the upside doesn't really matter anymore too much. I mean, we had the upside somewhere around here on the chart. It's pretty much hit where the analysts thought it would be. So that's the yellow line here that we can see, and it just, we were down here. If I just look at TradingView very quickly, we can see where we actually bought the stock. We bought it over at the end of September, just here, somewhere around this level, and we got the news yesterday very quickly. In fact, one of our subscribers sent it in to us saying, "Have you seen this?" And actually, we looked at it and we couldn't see it because actually the actual candle was so high up that it was off the edge of the chart. So yeah, we. And
that was in pre-market, of course. In that sense.
Yeah, I know. It was just after. Yes. Actually, it was. You saw it, Hans, didn't you, in pre-market? Yeah. So we made a decision to sell simply because there's not much upside above the asking price for the stock. So that's a key thing. And actually, if the deal falls through, often what happens on these sort of areas is it actually drops lower than where it was at the start of this, because so many people have bought into it, trying to get some sort of profit out of the stock. So we thought yesterday was the fantastic opportunity to sell, and we came out of it with 23-24% profit in a month.
Okay, let's go from something that make the champagne bottles pop, and then go to something that might bring out I don't know if we should say graveyard beer or something like that. But Bavarian came with numbers today. Hans-Henrik, you've taken a look at them. Basically, I look at the market right now. It's down by 6%, little over 6%. It's down at the moment. So
yes,
what's the news here?
Well, it's Bavarian. They came out with earnings, and I was just looking through their earnings, and that actually looks fairly good. For those that have followed Bavarian, they know that just as with the Sealed Air that Liam just talked to, there was a takeover offer at, I think it was 233 up here. and it has been hovering around here. There had been a bidding war here, and the investors didn't really want to get rid of the stock because they thought this price were way too low. Then they gave up, the ones that tried to take over. That made the stock drop. And then we get the earnings today, and they're actually fairly good. They're on track to meet the objectives for the year. I think I've been reading through several posts this morning. I think most of the drop today, which is right now around 6% here, is due to the board, the head of the board. He resigned yesterday, a guy called Luc de Bruyne, and that was simply because he had been one of the major players about this takeover, these negotiations, and when that fell through, he saw that as that was a natural step to step down. And I think a bit as what we've seen with Novo, where turmoil in the board that reflects in the stock price.
And we will get back to that board on Novo because
we will.
That board is being set today. But one thing for sure is that investors just don't like any unknowns. They don't like any quarrels. They want calm, and that's where they're
especially these times. Yes.
Yeah. We are going to make another scene shift in that sense that yesterday was, of course, Thursday, which means that Liam has the Thursday Tech. That is a special article that you find on our platform, but also on our social media, at least a link for it. And Liam, yesterday, it was about robo-taxis, amongst other things. What was the news there?
The news is there's not really there's a lot of things going on, but I wouldn't invest it even with your money, let alone mine.
Thank you.
We hear about robo-taxis, and the potential is absolutely huge. So there is a lot of money to be made in here. So look at it, the global taxi market. This is it's difficult to get some solid numbers because a lot of companies don't like you talking about it. But Goldman Sachs came out and said it could be worth about $1 trillion by 2040. So that's not an insignificant sum to be going after. So I just put together a very low-level document that just says this is what autonomy is. This is what's happening. This is the worst-case scenario. They call it disengagement, and it really means, I'm going to crash, let's pass it over to a human. And then it's their fault, effectively. So quite interesting, some of the terminology going around. So the safety is something that's quite guarded as well. But just coming down to the bottom, we're really, Mobileye is the best company there, simply because it's been operating for longer. It basically provides the picks and the shovels for this stuff. So, they're the one to buy. I wouldn't touch them, though, because they're not great.
Look at the article. It's to be found on our members platform, and that's another reason to be a member of MyStockScanner.com. But since we're talking tech, Liam, I'm going to put you on the spot again because I saw an article this morning in an international news site that talked about that AI might be too big to fail, which means that the U.S. government should go in and support them if something happens. Is there meat on those bones at all?
They're saying no, but I think there's got to be, simply because when you look at the amount of money that's been put into the system over in the US, it's about $1.5 trillion a year, something like that, $2 trillion next year. We've got an issue where that's actually bumping the US economy up by around 1.5%, and it's growing by 1.5%. So if it pops, that means the US government doesn't get any growth. They don't get any more tax returns or tax income coming in. So it is a major issue for them.
That is something that nobody cross finger for anywhere in the world at the moment, because as said, it is what's driving the market. It's Friday. And I'm going to say that it always sounds like it's going to be done. We're going to pop a beer now because it's Friday, but the Friday bar is not open yet. But we're going to bring it closer in that sense. That you got one. You're ready. I like that. But on Fridays we pit two stocks against one another. So fasten your seatbelts. Here we go. And those stocks are AMD versus Broadcom. I don't know, gents, who's going to take what? Have you decided?
Yes, I think I will have a lead with AMD. And if I just find my screen here. There we go. We probably all know AMD is the chips right now. It's a struggle back and forth who will be the winner. And what we basically look at in our 3-point playbook is just the numbers that we have. We're not trying to predict what chip will win or what product will have the upper hand later on. When we look at AMD, just very quickly, there's a quality score at 94, which is fantastic. It's out of 100, so it's close to be the best. Earnings per share, we can see that is projected to go up a lot. The same with the revenue. PEG ratio, which is where we're seeing if we're paying too much for future growth, that is 0.4. We like it to be below 2.5. So this is excellent. Free cash flow is reasonable. We can see that there's no real trouble for them in paying their interest rate, and they're quite solid when this current ratio is above 1. So overall, when we're looking at the quality of the company, yes, quality is good here, no doubt. Looking at the potential in it, it is a bit hard, and that goes for both companies, because what PE are we looking at? When we're looking at the value chart, we are looking at earnings per share estimates, and we're looking at PE levels, price earnings. And we're trying to find out what has a company been sold at before, and this is just all over the place. Both of them are between 10 and 280 in the past, approximately. So it's all over the plate. So we have to look at what has it been sold at lately, and that means there's a good potential in the stocks, depending on, of course, the AI hype and momentum keep running. There's definitely good potential here, no doubt about it. Pricing, yes, the uptrend is good. So timing wise, I know market has dropped somewhat yesterday. We don't have, oh yes, we do have these prices here. So overall, AMD is a good buy. The question is it better than Broadcom, Liam?
Like you say, it's a very, very difficult one. If I just switch over to Broadcom, you can see just like AMD. I mean, let's go through very quickly the slight differences between the companies. So AMD is more of a traditional chip designer. They have a series of chips that they've designed for themselves. They go to companies like Taiwan Semiconductors and also Samsung as well, have some share of the market, to go and make those chips in huge numbers. They then get sent off to be packaged and then get sold off as individual units. Broadcom is slightly different. They offer, they're like the tech team in a Formula One garage. They offer the ability to create the best, the fastest, the biggest chips out there. So they haven't got any actual designs per se themselves that they put out there, but they do train or create chips for people like Amazon. They're Trainium chips that they use. So they're in a slightly different ballpark, a slightly different sort of market segment in here. But you can see here earnings per share growing massively over the next couple of years, according to the analysts. The PEG ratio is still quite low, so there's lots of upside. The returns on equity and invested capital, they've gone down last year. We don't actually know what they're going to be this year. Because of the investments going into things, they may get lower, but I have a hunch they might be a little bit bigger because they're getting so much money in now. Free cash flow is great. The red side here on the price free cash flow just shows that the price is quite expensive right now. And just like Hans says on the valuation chart, it's very difficult to say, where should the stock be? The analysts think it should be a lot lower, but by the end of next year, they think it should be up 16%. It's going along this baseline here very nicely. So that means that if that carries on for a year, it could be up 43%. So it's a good stock. And from a purely technical point of view and a timing point of view, the third question in the playbook, just dipped below his 50-day moving average. The MTI has just turned red down here. So we would wait for this to be green and this to go above this green line before we considered it. But it's not too far off.
But guys, it almost sounds like we have a toss-up here, that it's even Steven or where we at?
It's good we're sitting in two different countries, because we would have had a bit of a fight over them. I am leaning a bit toward Broadcom. They're trading at a bit of lower PE right now in the mid 80s, where the AMD is up in 123, I think it is, something like that. So, but again, if one of them grows double the speed as the other, then that equals out in half a year. So they are extremely close. They are.
My personal favorite out of the two of them is still Nvidia. I'm going to go with the third one like last week.
And we will get to Nvidia in just a sec because they have earnings next week. But let's go back. It's Friday, and we're going to wrap things up. I know that you have your weekend wrap, hans-henrik, on Sunday. But if we look at the markets right now, still red. There's only one stock in Denmark that's in green. That's Ørsted at the moment. I look at the futures; they are red. In that sense, that it looks like we have a little bit of a downturn. If it's serious or not, that the judges are still out. But interestingly enough, hans-henrik and Liam, we came from a record in the stock market, and then we had a big drop. That's very rare. It happened, I think, 9-10 times out of the last 20 years. Should we be worried?
No, it's, to be honest, not right now. As we used to say, tops are rarely a 1 day or 1 point turning point. There had been one I've been able to find in history, and that was in March 2020 when we went from an all-time high. 3 weeks later, we had gone straight down 35%.
That was COVID.
That was COVID, and everything, every other big turn, the crash in '87, the .com crash, the financial crisis, the tops in the market have been a process over months, over 3-6 months, a very volatile process that hurts a lot of portfolios. But one where, with our strategies, we get out in good time. We take some drawdown. We can't get rid of that, but we never panic over a 1 day drop.
But there's a couple of things here that I want to draw your attention to, and I don't need to because you've already seen it, of course. That is, Bitcoin dipped under 100,000, and we're not getting any numbers from the US, which means that the Feds, basically all of us, are flying blind when it comes to unemployment and stuff like that, housing markets that only the government knows about. Doesn't that really bode for a further downturn?
I saw the numbers are all good. It was on True Social. Someone said they were brilliant. So I think it'll be fine.
All right.
Yeah.
Okay, to be serious here, we are starting to get numbers probably soon. We don't know if we'll get some today, but several Fed members have acted, and one of the reasons why the market were quite jumpy yesterday was several Fed members were out yesterday saying, we're actually not certain that we're going to see a rate cut in December. Of course, there was a couple saying we needed 2 rate cuts, but there were some of the more serious Fed members saying, we're not sure we're going to see one. And that was simply because they're starting to see a lot more inflation coming in, and they're not really getting any numbers from the job market.
We shall see. We will be wiser coming into next week. We'll also be wiser as to NVIDIA. I'm going to get to that in just a sec. But before that, I need something from you, hans-henrik, and that is explain it to me like a 5-year-old. What's going on at Novo? They have a board meeting today. 7 out of 12 members are not seeking re-election. And the foundation put up, and this is maybe to some people, I asked you before the show, why do you put up CEOs from other companies?
How long time do I have? An hour?
No, you have a minute.
Yeah, well, the Novo case is a bit of a mess, and people that have followed it, a lot of people in Denmark have. The thing is, the reason why they're putting in board members from other similar companies is that all these major companies are extremely complex, and they need really, really skilled people. Novo would not put a member in from Eli Lilly because they are a close competitor, but from Ambu, for instance, or Novonesis, it's absolutely not a problem. They want really competent people. What everyone, including me, hope for is that the new board can get the shit together, to be honest. It has been a mess, and it has hurt investors quite a lot. So give them 3-6 months to show that they can get the troops and information.
Yeah, get their act together. We hope for that. I said in the start of the show that if you are a company, one single company that owns 1.9 billion shares in another company, you can move that company wherever you want. Maybe not. The company that is owned is NVIDIA, and it's BlackRock Liam, that owns that kind of stocks. That's basically $301 billion in value in NVIDIA. Honestly, couldn't they move NVIDIA's stock price if they wanted to?
If they decide to sell it all at once, then yes, there are certain types of orders that the big traders make that doesn't move the market in that way if they did want to come out. And that's what we used to SoftBank this week, where SoftBank came out of, I think it was 5.8 million, something like that. So yeah, these things can happen. NVIDIA's a fantastic company. Yeah, that's, as I say, that's my favorite out of the two.
you keep going back to it, and they come with numbers next week, and let that be the end of the show here, because we have a slew of numbers again next week. But by far the one it doesn't matter that Home Depot or Walmart or Warner Music or what have you comes with numbers. The one thing and we're even going to broadcast an extra show on Thursday because they come late Wednesday evening. But what are we expecting? Liam, hans-henrik, you get to say here at the end.
They'll have a fantastic time. It's the guidance that's going to be the key thing here, and everyone's saying there aren't enough chips to go around. So I expect good guidance, great numbers.
Couldn't agree more. We're looking at the guidance and we're expecting them to be great. But everyone are expecting them to be great. So are they coming out just 5% less than great? That could mean a bit on the price, yeah. But we're fans.
We shall see. It happens next week. We will be back on Monday because we are wrapping up MyStockScanner Live for this Friday. Remember, if you have questions for us, please send us an email. You can do that at fomo@mystockscanner.com. And all that's left for us is to remind you there's a weekend wrap from hans-henrik on Sunday. And then do like we do here on MyStockScanner Live in the 3-point playbook. Stay on top of the news. Go with your strategy. And then best of luck when you're out there investing. Have a happy weekend. See you guys on Monday. Cheers, guys.
Cheers.